Something big could happen to the US dollar and Swiss franc currency pair. First off, read this disclaimer carefully. We are going to look at the Swiss franc. Go here to real money, go here to Forex. So we are going to look at this pair. Okay, the US dollar is the base. Here you can see the distance from the 52-week low and 52-week highs. Here's some data about Switzerland. GDP, consumer price index change, very small actually, 0.4. One of the smallest here on the list. Total tax rate, 29%, 32% forested area. Let's first look a bit at the seasonality. Let's go a bit into the past. First, you can see here that May and June, 50% of the months, the US dollar Swiss franc pair closed higher than it opened. And you can see that September is characteristically a very weak month. We peak a bit in July and then we weaken. If we look at the most recent developments, 2001 to 2020, you can see here that June is actually the weakest month for this pair. July seems to be a bit of a comeback month. Then you have, at least it ends weaker in December. Okay, let's look a bit at the charts, because there are some very interesting developments. So the US dollar slash CHF is the pair, which means that when price goes down here, it means that the US dollar is weakening vis-a-vis the Swiss franc. You can see here that the US dollar, it reached a high here during the dot-com bubble, and to the low here, that was a minus 61% weakening. That's pretty substantial. You can see that since this collapse low here, we did see some good rally in the dollar, 44%, towards that high, but as you can see, we are forming on the weekly data points, these are multiple years, a topping pattern. This is a rounding top for the US dollar. That's rather interesting. And if you look at the most recent developments, so you could make a case that we have a consolidation box here, though you can see here that there is this deterioration. We are struggling with more and more moving averages, and we are slicing through many key horizontal support levels. So what was once support has now become resistance. First we get into trouble with the 100-week moving average, then the 50-week moving average. Now the 20-week moving average is a problem, and then the 10 and the 5. So there is very clear deterioration. Given that we have this massive, very suppressive pattern here, on top of it all, there's good reason to think that the US dollar is going to weaken further. And as you saw on the seasonality, June is a weak month for the US dollar in this pair. So there's a lot of factors here that suggests that we could see the Swiss franc gain significant strength. The correlation with the S&P 500 is 14% positive, so basically almost no real correlation with the S&P 500. So this is one way to be uncorrelated and have multiple positions. RSI 41, more or less in the neutral zone. So even though we've seen this recent pullback, we are not oversold or anything like that. You can see that there are very clear cycle patterns here, rise declining cycles. The cycles can certainly change throughout time, especially this amount of time in multiple years. You can see, however, that there are some recent cycle rhythms. Rise, decline, which you can see quite clearly reflected in the price, and here is a rise and decline. Given the most recent cycle patterns, there could be it suggests that there could be more left in this declining cycle, which matches with us heading towards the mid of June and you know the June is a weak month. Let's look at the daily data points here, and you can see that we are below literally all the moving averages. Yeah, let's look a bit at the RSI historically on the daily data points. You see here that we do not like to be oversold or overbought, but it is a bit more common to be overbought here, at least heavily overbought than heavily oversold. Given that we are approaching the lower end of the RSI now, it could very well be that we will have a bit of a bounce. You have a hammer candlestick here on the 11th of June, which, you know, it is a bullish-ish candlestick, but that candlestick is occurring during a downtrend, so it could get some bounce, but likely to deteriorate towards the end of June. Yeah, this is very interesting, especially when you take into account that there are major issues occurring in the USA. The Swiss franc is characteristically viewed as a safe haven, and you have of course issues with the US economy. You have issues with the pandemic. You have the race riots. You have an election between Trump, who is an eccentric figure, and then you have Biden, which, I mean, there's pretty clear signs that he has potentially dementia or something like that, and that's not bullish. That is not that is anything. It certainly is not a safe haven. Okay, so when it comes to safe haven, Swiss franc is vastly superior. There's good reason to think that the US dollar will weaken further, and this is a rounding topping pattern. It's not a guarantee that a rounding topping pattern will mean that we will just go, we will break down. It is just that the probability of a breakdown now is higher. It is certainly higher, because here you actually had an inverse head and shoulders pattern, but there was no follow-through. No follow-through. They tried to, here is the shoulder, head, and shoulder. They tried to rally here, failed to break out above these levels, which meant that the pattern was basically neutralized. And then we have a breakdown, which causes a rounding topping pattern. So yeah, very interesting times for sure. Let's talk a bit about the dark side of fiat money. Because there are primarily three types of money. You have real money, which is gold and silver. Fiat money, of course, these forex basically, and then you have cryptocurrency. Okay, so one of the dark sides, fiat and military power, they are intimately interconnected. It is not a coincidence that America has the reserve currency, also just happens to have the biggest army. These are one-to-one. Okay, that's how it works, and this is also one of the reasons why, even though I do think that there are speculative opportunities in cryptocurrencies, I cannot imagine a future in which the cryptocurrencies will succeed without the backing of the military. As long as the cryptocurrencies are these disruptors on the outside, the split second the cryptos become a real threat to fiat money, the military intelligence complex will utterly destroy the cryptocurrency market. If I were to guess at the angle they will use, you will probably all of a sudden see a spike in the media focusing on how cryptocurrencies are used for pedophilia. So there will gradually be this this notion that cryptocurrency equals pedophilia, and that's a very easy way for them to build pressure against it. And then you will see that the crypto exchanges will be dropped from. You will not be able to find them using the major search engines, and they are going to be blocked. I mean, so yeah, I think that is eventually something along those lines will happen eventually, because without military power behind you, you are going to struggle. Yeah, it is just how the world works. I mean, I would like to have a world where things were different, but there's no point in being like a hopeless idealist. We need to like look at the reality, and throughout all of human history, if you want to have power, you are on the side of the military. If you are trying to go up against it, it doesn't work. We are not at that developmental stage yet. And yeah. Okay, so fiat money is also bad for ecologism. The thing is that fiat money is the best friend also of the growth monster or the growth beast, because fiat money is not it is not a limited resource. You can just make more. It is completely based on make-believe. So the extreme and reckless population growth that we have seen, that is literally killing the Earth's ecosystem, that would not be possible if the monetary system was based on, as an example, real money, like gold and silver. Because then there are these limits. But with fiat money, we can grow and grow the economy at the expense of the very planet we depend on. So yes, fiat money bad for the environment. It is obviously way too liberal when it comes to debt. It is part of the debt monster. It happily enables over-leverage and risk. There certainly is a lot of risk in the crypto market, but when you take into account how easy it is to get like even like 500 plus leverage in the forex market, then you can get some really crazy moves here as well. And that is how the forex billionaires became billionaires. They used leverage, which also means that if you find trading cryptos interesting, you have much bigger opportunities in fiat, because there's much more liquidity and it is a more mature market. Asset prices are excessively inflated by fiat money. The huge rally we have seen in the S&P 500 and other indexes after the crash earlier this year, that is based on printing money. If the central banks did not have the ability to just invent trillions of new money, then the market would be at a very different level. So yes, fiat definitively can cause massive inflation, but the problematic thing about inflation is that it can funnel itself into different places. Because many people, they think of inflation it's only going to affect like food prices or something like that, because that is the typical example of inflation, food prices, the cost of bread. But we also see that inflation the forces of inflation can focus on certain places in the economy. And after the housing bubble, it's pretty clear in the US, inflation has very focused on the stock market. So that's something to keep a very close eye on going further as well. Fiat makes it easier for banks with bad business models to operate. Yeah, definitively. Fiat is not good at preserving human rights. No. Because fiat money, it is so intimately connected with military power. If you look at the US stock market and you look for Iranian stocks, ADRs, there's not many. Try to look for North Korean ADRs, you can't find it. And that's because of power. Money is power. And of course, it is not like the other people in the other places of the world do not deserve human rights. And I do think that access to financial markets is a human right. It is the human right of the business person in, let's say, Iran. But it is also the right of, like me in Norway, to, if I want to invest in a business in Iran, I should be able to just do it. I should have that as a human right. But yeah, fiat is power. Okay. So the fiat monetary system is centralized and enables political schemes. Okay, let's now look at the American stock market, the US 500, which is the S&P 500 futures. Yeah, I did certainly expect some deterioration. I do have a bit of a bearish lean, given the age of the bull market, that happened before this plunge. But I did not expect this big of a move. I expected some pullback, but what happened yesterday was, it should terrify everyone, okay? If you have been throughout this rally like, oh, new bull market, everything is safe, this candlestick here should scare the heck out of you. This is not healthy. So for those of you who thought that the crazy times were over, no, they are back. Crazy times are back. This should not happen. The worst thing, there weren't even any huge news yesterday that could adequately explain this move. So that that's a major issue. That's a major issue. So this is a sick market. Be very, very careful. As I suspected, we did find support here at the red 200 day moving average. We are bouncing a bit so far today. So definitively keep your eye on this 200 day moving average. Very, 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 very important going forward. Yeah, things are exciting. Things are definitively exciting. This has been one of the best times to be a trader. Being an investor has been more tricky, but from a trader's perspective, this is amazing. But yeah, crazy times. Whatever you do, of course, you want to let the trend be your friend. And as the market clearly told you yesterday, this is a market where you want to be diversified in a statistical sense. You want to be as market neutral as you possibly can. You want to have a portfolio that does not have any specific risks connected to the health of any specific market.